In addition, a coin that you want to be aware of, or types of coins, are stable coins. And they are different. They're very different, and really not what we're looking to in terms of investing into a cryptocurrency where we're expecting the price, let's say, to appreciate in price. And so they perform a function in the cryptocurrency world, but they're not something you would necessarily be buying and trading on their own. They're more to facilitate buying and trading. So what are stable coins? So stable coins, basically what they do is they peg their market value to a fiat currency or another external reference point. Let's say like the US dollar, right? So their market value is not based on trading, back and forth like other coins and other types of exchange traded things like a stock in a stock market, for example, or Forex market. It's traded, is based specifically to that, pegging it to that fiat currency. And so you're not really trading it to try to, increase your value based on the stable coin. The whole idea of a stable coin is that it's stable, right? And the reason it came about is that cryptocurrency, as we know, is very volatile in general, as in the prices go up and down, pretty wide range, can be very, volatile as far as going up and down range of prices. And so what we needed was something that would add stability, something that was asset-backed with real fiat currency behind that to facilitate things. And so stablecoins made it easier make it easier to conduct business or trade without fiat currency. So you're using a stablecoin in replacement of, let's say, the US dollar as a fiat currency. And also stablecoins are designed to be easy to convert to fiat. That's where a lot of exchanges will have you, let's say, trade a stablecoin for, let's say, Bitcoin, but then when you want to, let's say, cash out or take your money out, you'll convert it from Bitcoin to a stablecoin, and then a stablecoin is what allows it to be converted into your personal fiat currency you use, dollars, rupees, euros, whatever that might be. And so they'll use it that way to pair with a crypto coin on an exchange. So to give you some examples of ones, the most common and largest one of the first ones, if not the first one, is Tether. Its ticker is USDT. And you might have noticed in the previous lesson where I was listing the largest type coins that are, in terms of volume, you had Bitcoin, you had Ethereum, and a lot of times number 3 is going to be Tether. And again, Tether's value is not going up and down as much because of it's being traded. It changes a little bit because of it's pegged to the US dollar. But it's not something you're trading in to trade to like you're trading traditional true cryptocurrency. So Tether's the largest, and then Tether ran into some problems years ago as far as did they have enough real hard assets in terms of dollars and things backing them up, and there was a little concern about some of their transparency stuff. You can go Google that and find out all about that. But what happened was arose a competitor to Tether, which was true. And you can see they kind of put the T at the front, TUSD. Same thing, pegged to the US dollar, as another type of coin, stable coin they find out there. And then there are other ones too, Gemini, which was developed by the Winklevoss twins, very famous in cryptocurrency, and the Gemini network exchange. And they designed it to be very regulated, and that's in a good way. They're trying to really build a lot of regulation in not only their exchange, but into their stable coin that's traded on their exchange to facilitate trade. So you've got Gemini, Eurs, which is basically the same thing as just using euros as it was pegged to Singapore dollar, pegged to Singapore currency. You can see these different things that they do. But the main takeaway from this is that stable coins are different, and that think of them as a way to facilitate your cryptocurrency trades and facilitate your trades on your exchange. Instead of using, let's say, your fiat currency to buy Bitcoin, you'd be converting that fiat currency into, let's say, Tether, and then you would use your Tether to buy and sell cryptocurrency and back and forth. Oh, by the way, they're pegged to, let's say, a fiat currency like Tether is the US dollar. That doesn't mean you need US dollars to buy Tether. You can use anything to buy Tether, a cryptocurrency that can buy Tether, or any other fiat currency. Just understand that the value of Tether is pegged to the US dollar as an example. And that is by far still the most common one.